NVIDIA's self-driving business is 1% of their revenue. Data center looked exactly like this in 2018, a side business. Now it is 90%. Elon Musk said NVIDIA won't threaten Tesla on self-driving for 5 to 6 years. He might be right, but that is not the question. On January 5, 2026, Jensen took the stage in Las Vegas. 90 minutes, his own product launch, his own stage. He said Tesla's FSD stack is completely world-class. The Tesla stack is the most advanced autonomous vehicle stack in the world. Then he announced NVIDIA is building the full stack for every automaker trying to beat Tesla. The next morning, Elon Musk posted one line. Maybe competitive pressure in 5 or 6 years, probably longer. One man publicly crowned the competitor. The other dismissed the threat. Neither talked about what the data says. NVIDIA reported $81.6 billion in revenue in Q1 FY 2027, up 85% from a year ago. The stock dropped. Markets do not drop on great numbers. They drop when a story is fully priced and the next one has not started yet. NVIDIA set a $5 billion target for its automotive revenue for fiscal 2026. Jensen told you what the next story is. In March 2026, he stood in the SAP Center in San Jose, a 17,000-seat arena they normally use for hockey, and said,
"The ChatGPT moment of self-driving cars has arrived."
He announced at least $1 trillion in orders through 2027. The stock still dropped. The market is not celebrating the $81.6 billion. It is looking forward at something currently worth 1% of NVIDIA's total sales. To understand why that number matters, go back to 2018. NVIDIA total revenue, just under $10 billion. Gaming was 57% of that. Most retail investors buying NVIDIA were buying a graphics card company. Data center was 20% and growing. But nobody called NVIDIA an AI infrastructure company then. That was not the pitch. That was not the story anyone was telling. Then ChatGPT launched, November 2022. In FY 2024, data center was 78% of NVIDIA's revenue. In 2025, 88%. The segment Wall Street called a secondary business consumed the whole company in under 3 years. The mechanism was not complicated. A technology inflection arrived. It needed compute. NVIDIA had the compute. Every dollar spent building the AI era moved through NVIDIA's chips. So the segment that started at 20% and looked like a rounding error became 90% of the company. Automotive is 1% today. Jensen is calling March 2026 the inflection point. So the question for your portfolio is not whether Elon's 5 years timeline is accurate. The question is whether self-driving gets its own inflection. And if it does, who supplies the compute? This is the pipeline right now. $11 billion in design wins across the automotive industry. The Mercedes-Benz CLA is in production in the US right now, running NVIDIA's full autonomous driving stack. General Motors has committed NVIDIA chips to Chevrolet Equinox, the GMC Sierra EV, and its factory automation systems. Uber has agreed to launch NVIDIA-powered autonomous vehicles across 28 cities and 4 continents by 2028. Los Angeles and San Francisco start in the first half of 2027. At GTC 2026, BYD, Geely, Hyundai, and Nissan all expanded their NVIDIA partnerships for Level 4 vehicle development. The Drive Thor chip delivers 2,000 teraflops of compute, 8 times more than the chip before it, already shipping. But now the number I set aside. NVIDIA's FY 2026 automotive target was $5 billion. They shipped $2.35 billion. That is a 54% miss on their own forecast. And Jensen was not publicly pressed on it. There is more. Qualcomm's automotive revenue is running above $6 billion a year, 2.5 times larger than NVIDIA's $2.35 billion. The company most people picture when they say NVIDIA is winning automotive is not the automotive revenue leader today, not by the numbers. NVIDIA also does not disclose gross margins for its automotive segment. There is no public data on whether this business earns like data center or costs like hardware manufacturing. That gap in disclosure is worth noting. So the pipeline is real. The contracts are signed, but the revenue arrives in 2029 and 2030, not 2026. The 1% number is the starting point of the argument, not the conclusion. Now, the thing that connects everything. Tesla does not use NVIDIA, not in its vehicles. Tesla builds its own chip, hardware for, and trains its system on data from millions of its own cars. Tesla's FSD subscription business earns roughly $213 million a year, less than 0.3% of Tesla's total revenue. The software bet both companies are making has barely shown up in either income statement. But NVIDIA does not need Tesla to lose for this to work. Every automaker building toward Tesla is building on NVIDIA. The bigger Tesla's lead gets, the more urgently every other manufacturer needs the tools to close the gap. NVIDIA supplies those tools. So, Elon's timeline is not a threat to the thesis. It is the thesis. The longer Tesla leads, the longer the race runs, and NVIDIA sells to every runner except one. The investor holding NVIDIA right now, who bought at a lower price and is watching it trade near highs, is asking one question: is the data center story already over? The honest answer: data center is not over, but its sequential growth rate is bending. 25% one quarter, then 22%, then 21%. The curve is not collapsing, it is flattening. And 61% of NVIDIA's revenue comes from 4 customers. That is the story that is priced. The second question is the one worth asking. Is automotive the second S-curve, or is 1% just 1%? 1. Watch Uber's Los Angeles and San Francisco robotaxi launch in the first half of 2027. That is the first real-world stress test of NVIDIA's autonomous stack at scale. Watch whether it expands or stalls. 2. Watch NVIDIA's FY 2027 automotive revenue. The design wins are supposed to start converting. If the number does not approach $4 billion, the S-curve comparison needs a serious rethink. 3. Watch whether NVIDIA discloses gross margins for its automotive segment. The day they break it out, you will know if this business earns like data center, or if it does not. Jensen called Tesla the best at self-driving at its own product launch. That was not a compliment, that was a customer profile. One of them is describing a race, the other built the track. Which side of the track are you on right now? If this breakdown was useful, hit like and subscribe. I go 3 layers deep every week.